Foster Financial is a boutique retirement and investment services firm that works with individuals and employers who understand that when it comes to ensuring one's financial future, one size does not fit all. And here to share more with us about today's topic is Heather Foster. And Heather, it is so great to see you.
Always good to be here.
Yes, of course. And today we are talking about buying into the market dips.
Yes.
And you and I were saying people had a chance to do this. Some folks took your advice, some people did not.
Yes.
Tell us why this was a good thing to do.
Yeah, well, I mean, the markets had come down 19% off their record high earlier this year. So we're talking now after the fact, but this is why I want to talk about it, because when we make those phone calls, when your financial advisor calls you and says, hey, you know, the market's taken a 19% dip off of its record highs, might be a good time to think about maybe putting some more money in the markets or repositioning your current assets. So I kind of want to talk about repositioning your current assets more than just, hey, I've had money sitting in my cash account, because we do see that a lot. People sitting with hundreds of thousands of dollars sitting in a bank account earning them nothing. Was a good opportunity for them as well. But even if you're somebody that just maybe has your 401k in a moderate stance, but really you're younger and you should maybe make it more moderate aggressive, that reallocation opportunity was a good time to do that, right? The markets were down. Or Roth conversions is a big one that we do, where you're repositioning pre-tax money into Roth. You do that, you'd like to do that when the markets go down, because you get more money repositioned, and when the recovery happens, all the profit of the recovery is in your Roth IRA and it's tax-free. So paying tax versus not paying tax is a good position. But what do you think we heard when we call people? The markets have gone down 19%. A lot of apprehension on what was going to happen with the tariffs, right?
Yeah.
So what do people do? They tend to, what would you want to do?
I guess save all my money.
Yes.
And not spend it.
Put it under the mattress, right?
Exactly.
And continue to hold on to it and go, oh, no, I think it's going to get worse. What if it gets worse? So fear. Fear takes over your mind and your body, saying, nope, it's already gone down 19%. What if it keeps going down further and further? You've got to start to reposition that and go, okay, anytime the markets come off their record highs, it's potentially a very good time to invest, or again, reposition current investments that you already have via Roth conversions or via a reallocation of your current investment firm. So buying those dips is, again, taking the emotion out of it, sometimes even the logic out of it, and saying, I'm not going to get emotional. Maybe it's a good time to front load my 401k. So if you put money in your 401k every single paycheck, maybe you pull a little bit more in while that market's down. So you're buying that dip, and then you can lighten up as the markets recover. So again, if you didn't do this, and maybe you got a call from your advisor, maybe you didn't, I don't know. We've got people flagged for this in our system that says, we actually call them market drop investors. It's somebody that we've coded in our system that has money either set aside or didn't want to invest quite yet. They're fearful of the market, but they tell us, hey, when you feel that it's a good time, call me and let me think about putting some money into the market. So we made those phone calls, but when the markets came off, right? And some of those people said, absolutely, go ahead and do it. If you think it's a good time, go ahead and do it. Some of them said, oh, I'm apprehensive, I don't want to. I think the markets are going to go even worse. I think it's going to get really bad. And here we are sitting after the fact, back to full recovery. So you have to listen, number one, take the emotion out of it, listen to your financial advisor, and then make sure your financial advisor is actually, again, doing that work for you, to pick up the phone, to call you and say, hey, it is a good time to think about doing this. We're off our record highs quite a bit. Let's take advantage of this opportunity.
Okay, always good advice.
Yeah.
Heather, thank you so much. And maybe you guys would like to work with Heather Foster or another financial advisor at Foster Financial. If you would like to do that, all of the information is on your screen.